Everyone, and thank you for joining us on this webinar. My name is Kira Greenwood and I'm part of the events team here at AICPA and CIMA. Just before I hand over to our host for today, there are a few housekeeping points I'd like to make. To minimize disruption, you have all been automatically muted. So if you have any queries, we'd love to hear from you throughout the session. So please do pop them into the questions box as we'll have a Q&A towards the end of the webinar. Following the session, you will receive a copy of the slides, a link to the recording, and a link to a feedback form. Without further ado, I'll hand over to our wonderful host for this evening.
Hi, good afternoon, everyone. First of all, I would like to warmly welcome everyone, all the attendees on behalf of CIMA Canada and also on behalf of CIMA Canada CPD Committee for today's session themed as Unlock the Future of Finance using Generative AI and Data Analytics. We all know that today's modern world, the AI is a hot topic, and it's been revolutionizing entire financial industry. And we thought as CIMA committee, CIMA CPD committee, it would be a great topic to give a CPD session for all our listeners. So today's session will be revolved around two main topics. One would be generative AI, and other would be on data analytics. And through generative AI, we are talking about how AI can automate complex tasks and also can generate predictive models and provide actionable insights. And through the data analytics, we are talking about how the power of data in terms of uncovering trends, optimizing performance, and also mitigating risk. For today's sessions, our event partner is Sapling Financial Consultants. So Sapling Financial Consultants is the boutique firm based in Toronto, Ontario, specialized in financial modeling, due diligence, and data analytics. And representing Sapling Financial, today's our presenters are Morné and Ali. Morné is a senior engagement manager from Sapling Financial, and Ali is a consultant. So I would like to warmly welcome both Morné and Ali for today's session. And hopefully, after today's session, we all should be able to learn something new in terms of AI and data analytics. So I'm going to hand over to Morné and Ali to resume our session. Thank you.
Thanks, Talina. I appreciate it. And a very warm welcome to everyone. So as Talina mentioned, we'll talk a bit about generative AI and data analytics. Feel free to post your questions in the chat as we go along, and then at the end we'll address all of those in batches. One thing maybe to point out at the start, AI is ever evolving. So what you're going to hear today is relevant as at today, but tomorrow something else might pop up that can change the world completely. So Ali, maybe if we can just quickly jump to the next slide. So I just want to do a brief intro around Sapling. Then Ali will jump into the more AI and data analytics pieces, and we'll show you guys some real life examples as well. And I think everything that we're going to show today, or most of you guys would have seen, but hopefully it makes it a bit more practical for you guys. Ali, let's go to the next slide. And next one. Okay, so just a brief intro on who we are. So as Talina mentioned, I'm a senior manager. Ali is a consultant at Sapling. We are a boutique consultancy firm based out of Toronto, focusing on financial modeling, data analytics, and due diligence, specifically with a focus in the mid-market sector. And we really try and tailor our engagements for our clients. Ali, next slide. So we basically came together, so our founders came together to bridge the gap, or two gaps essentially in the market. So we offer high quality financial modeling and due diligence at an affordable price point. So we deliver the same quality of work than the bigger players in the market, but at a very much affordable price point. And then also the gap between IT and finance. So when you come to us, our finance folks like me, so I'm a CPA, can speak the data language, and an IT person like Ali can speak to my finance folks easily because we do cross-train them and everyone can speak each other's lingo. And then if we just go to the next one. So we are based out of Toronto, all full-time employees. We are set up like a mini Big Four with partners, managers, consultants, analysts. And then our expertise is from CPAs to CFAs to philosophy degrees, comp sci, business finance, so it's all over the place. Ali, the next slide. This is really just our services. I'm not going to spend a whole lot of time on it. You guys will receive the slides afterwards. This is really just everything that we can do. So how I usually explain to people, anything in Excel we can do for you, anything relating to a deal, most of the items relating to a deal we can do for you, and then anything in SQL or like in a database, automations or Power BI or dashboarding we can do. And then we have some hourly work as well. So this is really just high level. Feel free to read the slides afterwards and feel free to contact us as well. So with that, I'll hand over to Ali.
All right, let's talk generative AI, and we'll get to data analytics part as well. But in the first half of the presentation, we'll talk about generative AI, history of it, what AI is, and how it is impacting the finance industry. So artificial intelligence has been around for decades. It has gotten a lot more popular last few years, but it's been around for decades, since 1980s. Big financial firms and banks have been using artificial intelligence for their fraud detection, credit scoring, and certain automation processes. But over the last few years, we're seeing a huge growth in artificial intelligence, not just in finance industry, but in any industry that you can think of. There are some differences between AI currently and versus AI past. AI in the past has been mostly rule-based with limited flexibility, but AI today has, since it's being trained with a massive amount of data, with massive amount of processing power, it's much more powerful and much more flexible. AI in the past used mainly by big players, big financial institutions, but currently these days, employees and even smaller businesses are using AI and implementing AI in their current business. And lastly, AI in the past was more of a luxury and a helpful option, but today it's becoming more and more of a must-have to stay competitive into the market. Now, what is artificial intelligence? So artificial intelligence is simply a mean of using computers to do the task that requires humans to think, process, and recognize pattern to ultimately make certain decisions. What is really useful analogy for artificial intelligence is human brains. And when a new baby born, it doesn't understand anything. It just receives a lot of data through its sensories. Receives pictures, they can see a lot of things, they can hear a lot of things, they can taste, but they don't understand much of it. That's the same story with artificial intelligence. At the beginning, there are a lot of data that each of these AI models gets trained on, but unless it gets to a certain point, it's just a raw data. Just like human brains, after a certain age, the baby starts to find patterns, they start to understand certain things. The baby could hit their head to the wall, but then the second time they stop hitting their head to the wall. Same thing happens with AI. A lot of these AI models and AI systems, they are based upon certain statistical analysis. So it could be a certain regression model, certain k-nearest model. Those are the base that helps AI to find certain patterns and make certain decisions. And ultimately, all of these AI models that are based upon certain statistical analysis are being run on an automatic basis 24/7. As long as there's power, these AI models are working, and are working similar to a human brain. So in short, AI is a tool that learns from the data and help you to make decisions faster, and in a lot of this instances much more accurate as well. So there is a concept in the artificial intelligence world where we have a predictive model as well as generative model. So traditional AI has been mainly focused on predictive model, but in the last few years, probably since 2020, generative AI models has become a new term. It's become a new norm, and what you notice in ChatGPTs of the world, co-pilots of the world, those are generative AI. And we'll talk about the differences between predictive AI versus generative AI. So I'll talk about this difference between predictive AI versus generative AI as through an example. Imagine you are working in a collection office of a business, and every month you issue certain amount of invoices, and with certain deadlines, due dates on each of those invoices. A predictive model helps you to recognize each customer, to realize and to understand the behavior of each customer that you have. You could push your all your invoices, historical invoices for each customer, into a predictive AI model. And AI model could predict after how long a certain customer is going to pay their bills. That is a typical predictive AI model, which helps you to recognize, okay, I have customer A, their typical habit is, for example, pays their bills after 20 days when we issue their invoices. So maybe if they didn't pay by 20 days, we could send them something. You are partially involved in the process as a collector, as someone who works as a financial personnel in that collection office. Now, what generative AI is doing now, in addition to all the predictions based on historical data, it helps the whole business to not only predict when each customer is going to pay their bills, but also it could draft an email, send a letter, to draft a thereafter letter to each customer with their with custom text and custom requirements, whether it's a date, whether it's a custom language they need to use in order to advance that collection process. So that's the power of generative AI over predictive AI. Predictive AI, there is a lot, it's a strong model, but a lot of human actions are still involved, whereas generative AI, the human involvement become less and less part of the equation. And the applications in finance could be automating financial reporting, enhancing forecasting, detecting anomalies, fraud, managing contracts, and improving overall decision-making processes. As less human interactions involved, so there's going to be less errors overall in each of these processes. Now, now that we know a little bit about AI, I'm going to talk about how each company is reacting to when they are adopting AI as part of their business core. So there has been some research happening over 8 years across 35,000 US firms, where they are studying the companies where they adopted AI as part of their core business, meaning they're using AI on a daily basis, they're using models, and etc. And this research showed that companies that adopted AI had a 20% growth in sales, 20% 21.9%, contrary to what normally people believe, increase in employment, as well as 22.40% increase in market value. So these are some. This study has been done and performed over 35,000 U.S. firms across 5 years of getting the values and numbers and comparing them. Additionally, getting a little bit deeper into the research that was performed, adopting AI has led to more product innovation. It also enhanced the operational efficiency, and either through cost reduction or by increasing the productivity of the entire team. So that's one thing. Sometimes people see the operational efficiency only through one lens, but it could either improve your efficiency as an entire team and your production is much higher, or it could also reduce your cost. Both leads to operational efficiency. Additionally, there has been higher returns on companies that adopted AI, artificial intelligence, earlier. So high returns for early adopters. And lastly, as you can see in the charts, there's been the numbers kind of supports where smaller firms, their growth are smaller versus the larger firms. So larger firms usually have higher growth in sales, employment, and market value, whereas smaller firms, due to all the risk they're facing, they've been a little bit more reluctant to go all in with AI. But the limited numbers that have been doing the AI, there's still a large number of, there's still a good percentage of improvement over their core business function, sales, employment, as well as market value. And we talked about AI and the impact on employment, and we saw that employment has been going up, but that is not the case for all the industries. Certain industry going to take the hit, whereas you lose some of the jobs, but you also create new jobs in a way. So this is another study where it looks at the workforce changes after years of AI adoption, mainly focusing on the auditing industry. So auditors have been sort of categorized into 3 different groups of junior level, mid-level, and senior level. And the study looked at how how the workforce changed over the years after the company adopted AI. So as you can see, across the years, there's been a delayed workforce impact. So you typically, as your company adopted AI, as your company adopts AI, you would not see major impact in the first few years, but after 3-4 years, you start to see a big drop in some of your workforce numbers. Also, you would see most impact, the major impact, or the only impact, as a matter of fact, has been mainly on more junior level people. The number of mid-level or senior level employee hasn't changed overall due to the adoption of AI. So that's another piece of information where maybe based on these numbers and these studies, there's been a shift happening in terms of the skill that junior people require if they want to join the workforce in certain industries, like, for example, auditing. And by looking at all these numbers, despite the workforce reduction, audit firms experience increase in production as a whole. So even though the numbers are the number of employees going down, the production has been going up consistently. And as an overall note about adopting an AI as a company, you gotta the main understanding is to understand that adopting AI follows production J-curve in a way. So you might start slow, and as a J goes down, you may not even see any much production due to, you're going to have a lot of upfront cost, whether that's going to be implementation, software integration, or just reskilling or retraining your workforce. But after a while, after your team get recalibrated to the new systems, and then you implement the software, the upfront cost is gone. You'll start to see the gains, and you start to benefit from adopting the AI within the company. So that's one important piece to note on adopting AI as a company. Now, we're going to talk about a case study that we did on, we as a Sapling engaged with a client to design a comprehensive backend with automated pipeline. So a company wanted to integrate and adopt AI as part of their business. So they had a major backlog of historical data that could be financial data, contracts, etc. So what Sapling did, we put together a comprehensive backend of data. I think it's a key. We'll touch on this in the next piece of the presentation on data and analytics. But one of the biggest piece of adopting the data is to have a good collection of data, clean collection of data. So Sapling implemented this backend where we stored all the data in a single database. We connected the data, we tagged the data, and the company developed and is still developing analytical dashboard AI agent that helping them run through all those contracts they've had historically, run through all those financial statements historically. Application, they are having, they're using a similar software as like now ChatGPT to run prompt to get certain information out of it, out of their data without going to sift through all the data that they currently have. And also AI and machine learning engine. So as a quick example, like they developed a similar looking front end for their application, and what we did, in a current like ChatGPT or Copilot, you could put queries, and it goes through the entire ChatGPT or Copilot, Microsoft Copilot backend database to find the best result for your prompt. But as a company, that is not typically a useful exercise. But for example, if you are not, but if you develop your own in-house capability of utilizing artificial intelligence, then you could, and ChatGPT does have this ability where with the good data, good backend, you could utilize ChatGPT, fit it to your data, to your company's data, or any other business that you have backend database. And it allows you to run prompts like summarize Q2 revenue performance. And if you run it on the general ChatGPT, it wouldn't be like you wouldn't get much response. But if you run it on a chat on a front end connected to ChatGPT, connected to your data, your historical data, you could utilize the models that OpenAI and Microsoft developed to sift through your data and understand and respond accordingly with summary of what you require. A query like highlighting key risks in 2023 annual report. This might be a task that if you hand it to a junior person in the company, might take days, weeks to sift through, and this is not something to replace the people within the company, but at the end it will help it'll help the process. It'll be something the company could not rely on, but could be a help next to the people that are currently working.
And let me also quickly jump in there. So a couple of things that we've seen the use cases for is your controller is leaving, or the controller left, you need to pick something up, or you just want to be more efficient. You can give these models, and even just like a chat GPT, you can give them your model or your general ledger and trial balance, say create financial statements. After you have the financial statements that it created, it kind of stores a lot of that information. And then you can say, well, create a forecasting model for me with the following assumptions. Then it can create that forecasting model. You can then, after that, say, well, go and calculate a variance analysis. So your auditors usually ask for your own variance analysis if you do quarterly reviews. Plug it in there. You have hopefully your general ledger linked to it. It can pull up and write the story for you. So it's all about using your data smarter. Now, a key thing here is everyone always thinks, oh, AI is going to replace me. And I had a very good conversation with someone at one of the big banks last week. And it's AI is not necessarily going to replace you. AI is going to free you up to actually focus on the things that matter. So I was at PwC a couple of years ago, where we started to introduce some new technologies in our audit. And at that point, it was also, now my first year auditor doesn't need to go and tick in 100 samples. My first year auditor can go and review outputs. They can focus on the riskier areas and get more coaching. So it's all about, like Ali mentioned earlier, is retraining your staff on knowing when to call out the AI model when it's wrong, and then let them focus on the other areas that they're actually trained for. We as accountants are not trained to just number hash. We are trained for analytical and paid for analytical mindset and analysis. And this is what these models really help us with, is to get real quick insights into the data and basically make sure that we can actually use our degrees and our minds to get those insights. So that is how we are thinking about AI. Now, there's, and Ali will touch on it a bit later, there's all of these tools out there, and you need to find the tool that fits your organization. So you have ChatGPT, they have a pro version. You have Microsoft Pilot, you have Microsoft Copilot, you have Google Gemini. You can invest in creating your own one. You can leverage some of these. A lot of your ERPs and finance systems is going to have AI built in. So Power BI, for example, leverages Copilot as well. So it's finding what works and then use it to its best to basically drive those insights and free up your staff's time. Thanks, Ali.
Okay, and with that, I think we can move on to the data analytics part of the presentation. And I think, if you ever really, here we're going to talk about the data analytics, but what's really important, mentioning here, and sort of the bridge between AI and data analytics, is that without having a data analytics, you cannot essentially think of adopting an AI in any shape or form. Data is essentially the backbone of any predictive generative model that you could implement. And in today's finance world, data is becoming one of the most valuable, and it's an asset for your company. Any sales transaction you make, any employee hires you make, any payroll that you successfully paid, these are your assets for your company. A company that has 10 years of sales records, 10 years of payroll they are valuable. They're much more valuable than a company that just has 1 year worth of records. So to understand that, that's really the biggest piece, to understand the value of your data. And something that valuable needs to be also protected very well. So typically, your data gets created, and what would happen once your data is created, whether it's a sales transaction, you will need to collect it. You will need to collect it through a software. That could be your ERP software, it could be your CRM. You could also just use your Excel to collect your data. And that data, and I think this is probably one of the, and from here, many organizations I've seen, they're just stop caring about it once the data is collected. The data is in the ERP, they're not going to touch it, they're not going to do anything about it. But the key starts from here, where you need to clear your data, clean your data, centralize it, standardize it, to make sure your data is readable. And once you perform all these processes on your data, you could then analyze it, look at the insights, look at their, maybe you could build the dashboards for different departments of your company. And at this point, you kind of understand, you gain some insight from your data. Then you could think of, hey, I want to now invest into AI and get some forecasting going in my business. So AI is essentially sits on the top of all these data that you're creating through the years. So it's very important to taking care of the data. And and talk about unifying your company's data. So I talked about the importance of the data, but part of the importance of standardizing your data is because you want to unify your company's data. Your company's isn't just based on one Excel file, or isn't just based on one accounting software. If you're running a business, you probably have CRM, you probably have an accounting software, you probably have an HR software. Your people might put their project into a project software. So there are all these data scattered around, and to get any types of things and any types of meaningful reporting, even a simple report, it's going to be very time consuming. Everything is in one corner, and it's going to be time consuming to piece these data together. If you want to get the report, you're going to get any types of meaningful insight. One piece is it's going to be time consuming, and another piece, it's going to be if you don't unify your data, your data is going to be very inconsistent, and there may be some duplicates as well. We've seen many times where the sales guy put some number into the CRM, and that number doesn't match the number that is in the accounting software. So making sure if your company is going through all this standardization of the data across all these different sources, you are making sure that your data is now consistent. The sales guy couldn't say they sold more, and then the accounting software doesn't show anything. So that's another key point in unifying your data. Once you unify your data, you could have the ability to see reporting and metrics that are cross-system. You could analyze your team's productivity based on the number of sales, as an example. And the other piece that we mentioned is unifying your data helps implementing and adopting AI further down the road. So here we have an example. We got, for example, you have source 1 could be your accounting software, source 2 could be your Salesforce or CRM, and source 3 could be your ERP, where all of these data matters, but then they need to be unified to be able to give you anything meaningful. So once you extract your data from tools like you could use APIs, script, but NVIDIA, and then even using AI for this purpose to extract your data, you can move it into the phase of data cleaning and the standardization. where you kind of want to make sure the data is consistent across all your systems. Once that is done, you move it into a warehouse where you can centralize all of your data. That could be a database, data warehouse, where now everything is in one location. And once you have that unified data warehouse, you could then push it into doing data analysis, dashboarding, KPI reporting, and further down the road, also utilizing that data in models and prediction and forecasting through AIs. So now talking about dashboards and KPIs, so you built your unified database, but now you want to get some insight from that unified database. So KPI, key performance indicator, really helps you and your company as a whole to see the metrics that are actionable. So if you're running a business, you can run through your raw data to find how's my sales going. That would be if you get an Excel file full of all the transactions, that wouldn't help you at all. What dashboarding and KPIs help especially leaders, CEOs, CFOs. It will give you a quick access. You can look at the number and you could immediately push it down to your team. Hey, why is this number looking like this? This is showing me there's something wrong with a certain production, certain teams not performing well. Can you look into this? So the insight that you get helps you run your organization much better, much smoother, and with actual facts, where the numbers are what matters, and it's not about I have a feeling the market might go down. Without any supporting, you don't make any good decisions. But KPIs and dashboard helps you build that trust by numbers and help you understand what you need to do. So real-time visibility and accountability across your team, empower across departmental transparency. So each department now, they don't do things based on what they think is right. There's a complete transparency of what's happening within each department. And making reporting to stakeholders, investor, board members. It's a tool, but it's also helpful for some of these formal stakeholders that need to get reporting. And there's a reporting that everyone now trusts. Becomes your gold source of truth, and enhances ability to react to the anomalies and opportunities. So I have here some KPIs, some common KPIs for financial KPIs. We got like AR, AP aging. Like some of the operational KPIs could be your employees' productivity, order fulfillment cycle, inventory cycle. Customer KPI could be customer satisfaction score, customer lifetime value, customer retention, and sales KPIs, things like leads to customer conversion, average deal size, and etc. So by looking at these numbers, you can immediately take actions, whereas looking at the raw data wouldn't much be helpful. And moving forward, I talked about general the importance of reporting, but here I want to touch on really the role of data analytics to move from being reactive to predictive and predict what's going to happen. So what typically happens in our many of the companies, they have historical reporting. So they have their data, they create certain reports based on their historical, what has happened in the past, and they give that to the manager, give that to the CFO, CEOs, and that's where they can see what happened. So what happened in the past? We had a bad quarter in the second quarter. So it doesn't tell you why that happened and then what's going to be happening in the third quarter. It's essentially just stating that, oh, we had a bad quarter in the previous quarter. So that's kind of a reactive kind of a mindset. But once you add an insight, so the insight is essentially your KPIs, your dashboard. You could get into the point of why did we have a bad quarter in the second quarter. That's where those KPIs come in. Those cross departmental KPIs would become important. So your sales are down. Why your sales are down? Is it because employee performance? Is it because employees productivity? Is it because your customer satisfaction score is low? Is it because of the reviews? You would kind of get in the sense of understanding why my sales in second quarter was low. And the next piece is prediction. So what's going to happen in the third quarter? And that's where the AI and models comes into the play. Now you have your reporting, your insights. Now is the moment where you have all these historical reporting and data. You could push it to the model and create different scenarios. Oh, if the market goes like this, I ran it through this scenario, iterates hundreds of times, and this is the likelihood results that I'm going to get. So that's where you start with the typical reporting. You understand what happened. Now you get into the dashboarding and KPI reporting. You understand why that happened, and then with the models, with the AI models, you understand what is going to happen if I continue the same trend or if I change one thing or another. That'll help you to, these models helps you to go through multiples of scenarios to understand what is the likely outcome. Now we've been touching on how data is important and is foundational for AI and generative AI, and that the reality is without a clean and centralized data, there is never going to be an AI, or there will be an AI that you're going to rely on other companies' data or other companies that are like public, their data is public. You're going to rely on those rather than you rely on your data. Your company runs on your data, not on someone else's data. The typical thing that I've been pointing out, you have your raw data, you need to make them centralized, and you need to clean them, so then you can then use these AI and machine learning models in order to create insights, automations. You want to automate certain processes within your business. That's where these generative AI models comes into the play. Forecasting, whether it's budget forecasting, sales forecasting, or you want to run different scenarios. That's where it's become important. Or really generating outputs, like Morné mentioned, generating financial statement. That might be if you want to generate certain types of financial statements based on the way you are doing in your data, that is another use case of your data and your AI model. And the key point is, at the end, companies that invest in clean, centralized data today are laying the groundwork for competitive generative AI applications tomorrow. So that's an important piece that we're trying to convey on data. And here's a summary of a dashboarding and a KPI reporting dashboard that we created for an AR, for an accounts receivable and collection department. So as you can see, we're showing a bunch of KPIs with indicators like balance, DSO, within due, overdues, and the balance across different ages. And this dashboard essentially helps the AR CFO or whoever's running the AR department to take a look at this, understand what's they're lacking, and what is not working essentially, and what needs more attention. And in addition to this, you can see we have a chart here at the bottom where you can see the actual versus estimated cash inflows within the 3 months forecast. So there's a forecasting also happening based on each customer's, where you can also drill through and see, like, based on the forecast model we ran, we are seeing, there's going to be this customer probably not going to pay, their invoices, and that's contributing a lot to what we were forecasting. Maybe we can contact the customer and remind them. Similar scenario for different customers. So the forecasting allows the manager to kind of get ahead of the issue before the issue shows up. That is the end to the data analytics section. I'm quickly want to talk about some of the emerging trends in the finance, generative AI and data analytics. As we mentioned, I think there's a rise of agentic AI, and that's being seen a lot throughout different niche industries. So there are a lot of smaller software companies that are creating these agentic models based on models that created by these bigger firms like OpenAI and Microsoft, Google. But these smaller niche software are helping businesses where they could adopt those softwares, and those softwares could could automate certain processes, or could help do some of these smaller tasks that are very manual within companies, and it might be very niche for someone to develop that. But these software companies there are a lot of these smaller software companies that are developing these agentic AI. So that's one of the trends that is going on. You could probably find an AI agent where it does modeling for you, where it does your budget, where it does your where it automates your invoices, where it automates your email. Anything you could think of that is being done in your company, you could probably find some sort of an agent. It's good to understand how those agents work, and to do some research and understanding those. Many of them are being developed, but we'll have to see how they're working. The other item we're seeing that is kind of in a trend is the enhanced security systems against fraud. So there are less fraudulent transactions we are seeing due to this AI, but in this fraud, the whole industry about fraud and then suspicious and detecting what is fraud, what is not, it's always a cat and mouse game. So right now the AI is kind of ahead, and it's helping to reduce the fraud, but it's always a matter of time. So it's always good to understand what you're going, what are the challenges security-wise you're going to face if you are part of the AI. So if you're securing if you're utilizing AI, there's always going to be a risk, but you just have to have that understanding of what is. You just have to balance what's risky and what's not, and understand the ways of mitigation, and then understand the trade-offs.
And try to quickly jump in here. So I think on all of these things, as we went through the webinar, is the key that's standing out here on the trends and where we came from is data is very, very important. And then there's all of these things that's going to come, or that's really out there, but then will help to speed up our tasks, improve efficiencies, transform it, deliver, like with the big data and real-time insights, deliver insights immediately to the teams, and then you can make it more auditable for regulatory requirements. So instead of your team just going to give invoices to the auditors will is not even like going to look at that, because there's going to be real-time auditing happening And we're really seeing that. So I think our key message to you before we move to the Q&A piece is make sure to train up the workforce and get your data in order, because if you're not going to do that in a year's time, you might be very behind, and it's going to be so costly to catch up. So yeah, and hopefully all of this has been insightful to you guys. So Ali, I think let's move over to the Q&A piece. I think there's a couple of questions. So feel free to pop your guys' questions in the chats, and then we'll field those as best as we can.
Fantastic. Thank you. What a great presentation. So the first question that's come through is talking about the earlier portion of the presentation. So how can a small business, such as a chain of grocery stores, benefit from AI, especially generative AI?
Ali, do you want to take that one? I can take that one as well.
Yeah, you can take it.
So how I'm thinking about that is, in a typical grocery environment or store, you obviously have all of these moving parts from when do you need to order, how's my inventory levels looking, when do I need to pay, how does my cash looking, how much of the credit card, like from the Intact or Visa or MasterCards, have been transferred, what's still in transit. So you can use all of that because you have all of the data, and it can create automatic reminders for you when you need to pay your vendors. It can create the automatic payment orders as well. Depends on how you link it with the bank, but then you can literally just go in and load and approve. It can create the full financial model for you on how you can monitor your cash flows and actually forecast that for you. It can create literally for you based on your historical trends. This more gets into the predictive on when do you need to order what. But the nice thing about that is it can actually react on a real-time basis. So that is how I'm thinking about it. So as long as all of the data is there. Now, if it's a grocery store that's running only on paper trails, it's a bit more difficult. But as long as the data is there, it can literally do anything. And then layering on top of that, you can then start to see your seasonal trends on specific things when you introduce some dashboards.
Fantastic. Thank you. So the next question is, it sort of addresses one of the points you made earlier about the concerns of AI replacing job roles. So this attendee has asked, the recruitment of workforce in most audit firms comes via junior staff. If that level of staffing is being replaced by AI, what happens to employee training and retention?
Well, that's actually very funny because I spoke to some of my previous partners like a week or two ago. So basically what is happening at the moment, and as we were going through the presentation, I actually thought about the exact same thing. So what is happening is there will be less and less junior staff, but there's still going to be the right amount, because now your first-year auditor is not going to tick invoices anymore. It's going to review what the AI bot has been doing, or the AI has been doing, to make sure it is still correct. Because ultimately, and I think we've all seen it when you're using GPT or Copilot or stuff, it's great, but sometimes it makes silly mistakes. So it is to catch when it is making a mistake. And then ultimately what's going to happen is you're going to need to train your workforce differently. So you're not going to get 2,000 students studying to become a CPA. It's going to be less, because you don't need as many anymore. And then what's going to start to happen is it's just going to shift into something else. So instead of auditing financial statements, these people are now going to start to audit AI bots, or AI and the bots, because ultimately all of your clients are going to start to introduce AI as well, and someone needs to audit that. So ultimately, there's going to be, and I think Ali made that point, it's not necessarily that we're just losing the workforce. It is more the skills that's going to be required is going to be different. So you're going to have a different type of university degree is going to be required to do this. And I think we've seen this over the past couple of years. And even if you just compare what someone needed to study to become a CPA 20 years ago versus now is different, and that's just going to change. So less and less technical from a finance perspective, more and more technical from a computer science and coding and understanding AI is going to be required.
Brilliant, thank you. And I think we've just got a few minutes for one more. How soon do you think the government and public sector in Canada will adopt AI?
We don't know. We hope soon, but what we always see with these big organizations, the government and public sector obviously deals with a lot of sensitive and personal information, and there's always the risk with the new technology, or with these types of technology in terms of cyber risk and data leaks and stuff. So, do I think it's going to be in the next year? No. Do I hope that it's the next 5 years? Yes. For them, the biggest risk or the biggest thing that they are contemplating at the moment, and I'm seeing that with the banks, I'm seeing that with how fast AI was rolled out in some of the audit firms and things. It's really assessing the risk from personal information, and it's that old saying like don't fix what's not broken. And I think that's what we're seeing at the moment. People first want to look at what's the true risk from a data perspective before they actually make the move. So I would say like the next 2 to 5 years is when they'll actually start to implement and use it a lot more than what they are currently using. They are using it, but not to its full potential.
Brilliant, thank you. Delina, I think I'll hand over to you now, if that's okay.
Sure. Yes. Thank you, Kara, for the Q&A period. And yeah, so by that time, I think we have come to the closing remarks of the webinar. So I would like to thank, first of all, the presenters, Morné and Ali, for their fantastic presentation. I think it was very insightful. And thank you again for both of you and for the Sapling Consultants. And also, I would like to thank all the attendees for dedicating one of the days schedule this webinar. And three quick things before we wrap it up. So like we initially mentioned at the beginning of the webinar, so we will be sending the PPT and the white papers, because we have some white papers of this webinar. So we'll be sharing this white paper and the PPT with all the participants. And also a small request. I believe that most of our CIMA members in Canada. So if you haven't done so, I sincerely urge all of you to join our CIMA Canada LinkedIn group, because that's where our the future events are being posted. And if you are in touch with that group, that you'll be getting constant notification. And in terms of our next CPD event, so that will be on an in-person event on tax update. So it will be on October 18th. Sooner you'll be getting any update through our CPD committee. So thank you very much. And I wish you a great rest of the day. So over to you, Kara.
Fantastic. As Delina said, thank you everybody for joining the session, and thank you to our wonderful speakers for today. It was a great session. So much information to take away. We will be sharing the copy of the slides, a link to the recording, and as Delina said, the handouts with you as well. So if you could take a couple of minutes, there's also a feedback link on that email. And it's great to hear from you about future sessions, as it helps us to tailor future webinars to yourselves and your peers. So once again, have a lovely evening, take care, and we'll see you soon.